This is the most aggressive, hostile takeover attempt in entertainment history. On January 12, 2026, Paramount Skydance launched a legal nuclear strike against Warner Bros. Discovery to shatter an $82 billion merger with Netflix. What started as a dispute over streaming rights has exploded into a winner-take-all war for the soul of Hollywood that involves Harry Potter, HBO, and the DC universe. With over $100 billion on the table and accusations of secret backroom deals, the outcome will decide who controls what you watch for the next 20 years. The battle lines are drawn, and the first casualty is the truth. To understand why courtrooms in Delaware are currently burning with legal filings, we have to look at the deal that started it all. In December 2025, Warner Bros. Discovery shocked the world by announcing a definitive agreement to sell its crown jewels to Netflix. The price tag was a staggering $82.7 billion. For this sum, Netflix would devour the Warner Bros. Film studio, the entire HBO library, and the streaming service Max. It was the kind of monopoly-building move that regulators usually have nightmares about, yet the deal was signed. Netflix CEO Ted Sarandos called it the future of entertainment, but competitors viewed it as an extinction event. The devil was in the details, and those details were brutal, because Netflix wasn't buying the whole company. They were choosing the best parts. The deal structure meant Netflix would take the profitable studios and intellectual property like Game of Thrones and Batman, while leaving behind the declining linear television assets. Networks like CNN, TNT, and the Discovery Channel were to be spun off into a separate, debt-heavy zombie company called Discovery Global. This separation created a confusing financial picture where shareholders were left holding stock in a new company that many analysts argued was virtually worthless. It was a classic corporate raid, where they take the gold and leave the rust. While Netflix was celebrating, a rival was preparing for a fight. Paramount, freshly merged with Skydance Media in 2025, decided it wasn't going to let its biggest competitor get swallowed up easily. Led by David Ellison, the son of tech billionaire Larry Ellison, Paramount launched a counteroffensive that made the Netflix offer look cheap. They put a $108 billion all-cash offer on the table. Unlike Netflix, Paramount wanted the studios, the streamers, and even the cable networks. It was a simple proposition of $30 per share in cash immediately. There were no complex spin-offs or zombie companies, just a massive payday for shareholders. If you are enjoying this deep look into the corporate war for Hollywood, hit subscribe and the notification bell right now. We cover business battles like this every single week. Now, let's get back to the lawsuit. Logic suggests that when someone offers you $25 billion more than the other guy, you take it. But the Warner Bros. Discovery Board refused 8 separate times. On January 7, 2026, the board formally rejected Paramount's sweetened offer by claiming it wasn't in the best interests of the company. They argued that the regulatory hurdles for a Paramount merger were too high, or that the financing was risky, despite Larry Ellison personally guaranteeing $40 billion of the equity. To outside observers, it didn't add up. The question of why a board would turn down a higher all-cash bid for a lower stock and cash deal is what triggered the lawsuit. On the morning of January 12, 2026, Paramount stopped being polite and filed a blistering lawsuit in the Delaware Court of Chancery. The suit didn't just ask for the deal to be blocked, but it also accused the Warner Bros. Board of breaching their fiduciary duties. Paramount's lawyers argued that the board was hiding critical financial data to make the Netflix deal look better than it actually was. They specifically demanded to know how Warner Bros. Calculated the value of that stub equity, which comprised the leftovers of the cable business. The accusation was clear that the board was rigging the game to favor Netflix. The core of this legal fight revolves around a boring term with explosive implications, known as stub equity. In the Netflix deal, Warner shareholders get cash plus stock in the new spun-off cable company. Warner's board claims this new stock will be valuable, while Paramount claims it is effectively zero. By refusing to release the valuation models, the Warner board made it impossible for shareholders to verify if they were getting a good deal. Paramount's lawsuit essentially demands that Warner Brothers show their math. If that stub equity is worthless, then the Netflix deal is tens of billions of dollars worse than Paramount's cash offer, and the board would be liability for massive damages. This isn't the first time these two giants have traded blows in court, and the history here is personal. Just a few years ago, Warner Brothers sued Paramount over South Park. Warner had paid $500 million for exclusive streaming rights, only for Paramount to turn around and release special movies on their own service, Paramount Plus. That legal brawl dragged on until early 2025 and created deep distrust between the executive teams. When Paramount approached Warner with a merger offer this time, the scars from the South Park battles likely played a psychological role. It's not just business, because for the executives involved, this war is a grudge match. Since the Warner board wouldn't listen, Paramount decided to replace them. Alongside the lawsuit, David Ellison announced a proxy fight to nominate a completely new slate of directors for the Warner Brothers Discovery Board. This is the corporate equivalent of a coup d'etat, where Paramount goes directly to the shareholders to ask them to vote out the current leadership at the 2026 annual meeting. Their pitch is simple, because the current board is costing you money by refusing our check. If Paramount succeeds in installing their own directors, those new board members would immediately accept the Paramount deal and kill the Netflix merger. Momentum is everything in a takeover, and on January 15, 2026, Paramount hit a wall. The Delaware judge presiding over the case rejected Paramount's request to expedite the lawsuit. Paramount wanted an emergency injunction to force the disclosures immediately so they could derail the Netflix vote. The judge ruled that, while the claims might have merit, there was no irreparable harm that justified rushing the court process. This was a tactical victory for Warner Brothers and Netflix because it bought them time to lock down shareholder votes and push their integration plans forward before Paramount could force their hand in court. Even if Paramount wins the proxy fight, there is a billion-dollar landmine waiting for them. The agreement between Warner Brothers and Netflix includes a massive termination fee. If Warner Brothers walks away from the Netflix deal to marry Paramount instead, they have to pay Netflix a breakup fee estimated at nearly $3 billion. Paramount has signaled they are willing to cover this cost, but it complicates the math. This poison pill was designed specifically to make a hostile takeover like this painfully expensive, turning the merger agreement into a pair of golden handcuffs that are incredibly difficult to unlock. Looming over this entire corporate drama is the government. A Netflix-Warner merger creates a streaming behemoth that controls a terrifying percentage of premium content. Imagine one company owning Stranger Things, Harry Potter, Squid Game, and House of the Dragon. Antitrust regulators in Washington and Europe are already circling. Paramount's argument to shareholders is that the Netflix deal will spend years in regulatory hell and might eventually be blocked. Their deal preserves competition by keeping Paramount and Warner as a combined counterweight to Netflix. It's a clever narrative that asks you to vote for us because the government will never let the other guy win. We have to talk about David Ellison, the man driving this tank. As the CEO of the new Paramount Skydance, he represents the convergence of Silicon Valley money and Hollywood legacy. Skydance has been a key partner for Paramount for a decade by co-producing hits like Top Gun: Maverick. Ellison isn't just a corporate raider, but a creative producer who argues that tech companies like Netflix don't understand the soul of a movie studio. His pitch is about preserving the legacy of the Big Five studios, rather than letting them become just another content tab in a tech giant's algorithm. It is an emotional argument, backed by cold, hard cash. The final decision doesn't rest with judges or CEOs, but with the shareholders. And right now, Wall Street is divided. Many institutional investors are furious at the Warner board for rejecting the higher cash offer. Pension funds and asset managers have a fiduciary duty to maximize returns, and turning down $30 a share for a risky $27 package is hard to justify. We are seeing major shareholder groups publicly criticizing the Warner board, fueled by the ammunition from Paramount's lawsuit. If the stock price of the new spin-off company continues to look weak, the shareholder revolt could become an unstoppable tidal wave. The clock is now ticking toward the Warner Bros. Discovery annual meeting in mid-2026. This will be the showdown. Paramount will spend the next few months campaigning for their new directors, while Warner and Netflix will race to finalize their merger documents to make it a done deal. The lawsuit in Delaware will continue to grind forward, potentially forcing the release of embarrassing emails or financial models that could swing the vote. Every week brings a new filing, a new accusation, and a new twist. We are watching a game of high-stakes chicken where the first one to blink loses billions. Regardless of who wins this war, the Hollywood we knew is gone. If Netflix succeeds, the ERA of the traditional movie studio system is effectively over and replaced by the streaming model. If Paramount succeeds, we see the birth of a mega studio trying to hold back the digital tide. This $82 billion lawsuit isn't just about money, but the final convulsion of a 100-year-old industry, transforming into something new. The names Warner Bros. And Paramount have been on theater screens since the silent era, but after 2026, one of them will likely never be the same again. The battle for Warner Bros. Is far from over, and the fallout will reshape every movie and show you watch for the rest of the decade. From secret valuations to hostile board takeovers, this is capitalism in its rawest form. We will be tracking every development of this historic lawsuit as it unfolds. If you want to stay ahead of these industry-shaking stories, make sure to subscribe and turn on notifications so you don't miss our next update. Thanks for watching, and I'll see you in the next one.